7th, and sorry, July 5th, and it's almost 20 minutes until 9 a.m., 10 p.m. Sorry, in England, UK, where I'm right now. And we're going to take a look at the markets as we usually do. And if you're new to this, my name is Alejandro Zambrano, and I'm the Global Chief Market Strategist of ATFX. And I lead a team that is based in England, Greece, but also Dubai, Hong Kong, mainland China, and Taiwan. But what we're going to do here is just talk markets, and it's the NFPs today. So that's going to should hopefully wake up the markets a little bit, because obviously yesterday was 4th of July, Independence Day in the US, so markets were quiet because our fellow traders from the US were taking the day off. So let's see if activity picks up today. Now, if you're watching this on YouTube or if you're watching this on Investing Cube, doesn't really matter, but do just leave a little message like a good morning. That's always nice. As well, don't forget to like that video. Just click on it here, and then you just click on that button here if you like the presentation. Okay, let's begin, and we're going to begin to talk a bit about the euro. So this is the euro, and the euro is just trading slightly lower today, which I think makes sense because this market right now is just trading sideways, right? It has support down here at 111.05 and this resistance here at 114.46. Now, because we're pretty much in the middle, not a lot of people are interested to buy here. They rather buy at the lows, alternatively sell at the highs. So this is what I want to focus on, this little range. As for the non-farm payrolls today, depending on the calendar you use, but if you use the calendar of Investing Cube, then the anticipated number is 170. I looked at some other calendars and they say about 140. Sorry, 160. So it really depends. You see, these numbers, the way they work anyway, is that they will ask a large sample of banks and different research houses. What do you think the NFP is going to be? Okay, one guy says 200, one guy says 150, one guy says 120, one says 170. So what they do is they take all these, and usually it's quite a large sample, maybe 50 different institutions and banks and whatnot, and then they take the midpoint. And the midpoint is usually what you see on economic calendars, like the one here on Investing Cube. You just click on calendars and you see it here. Now, according to this one, the forecasted outcome is 170, and what happens here really is that the last reading was actually, let me see here, the last reading was 75,000, and that was this reading here. But what's also a bit worrying is that in March we had another reading of 33k, and the initial estimate was actually 20. So then this was revised to 33. Let's see if the 75 one is revised upwards. Now, what's going to be interesting is that, you know, if we have a third reading of low figures, then that's probably going to scare people. And I think that makes perfect sense because all the PMI numbers, not just from the American ones, but numbers from across the world have all been rather soft. And that suggests lower activity. So if the number, I would say, so anticipated number is about 170, 160, depending on the calendar. So if the number is something like 100 and, or if it's like 75, that would be bad, I think. And we can probably see the dollar weakening on that because it's going to strengthen the likelihood that the Fed is going to cut interest rates. Now, that's just one part of it. The other part, of course, is the actual unemployment rate. Now, the unemployment rate is anticipated to, let me see here, remain at 3.7%. So that is where, you know, doesn't really move too much, really, the unemployment rate. It's been around this level for quite some time. Okay, let me see here then, if we can actually take a look at the charts. So, because we're bang in the middle here, there's no trading opportunity here. But it's not so hard to guess, really. If the numbers are really strong, we'll be down here somewhere. If the numbers are really weak, we'll be moving upwards. And depending on how quick on your fingers you are, really, or if you have limit orders, I'm going to show you something which is extremely risky. It's up to you what you want to do. Probably I wouldn't do it, but logically, we're dealing with a short-term downtrend here, right? And if we take out 29.99, we'll end that very short-term downtrend. So if we're trading here And you just think about it logically. Say it's 5 minutes until NFPs. What's going to lift price upwards? If the number is weak. So if the number is weak, we could potentially move up, then down, and then potentially upwards again. So this becomes a new low. On the other hand, if the number is weak, well, probably it's going to dip lower, or strongly dip lower. So it is possible to manage things with the entry orders. And the idea would be one can potentially buy here, but you put your limit order on there. You don't send them to the market though. I usually, if I'm going to turn them on from payrolls, I send orders to the market that are so close to price. I send them literally like 10 seconds before release. So 10 seconds, I have everything done, and then I click on submit, literally 10 seconds before. Because sometimes what happens, the price will spike up or down just before, because someone have an expectations on the number, or sometimes the number is leaked. So people sort of buy just before if they have info on the numbers. So you want to avoid these spikes. But yeah, take out this high, which is 112.99. Then the market may have potentially bottomed out here and we head upwards, because in the very, very short term, as well, not very, but multi-day outlook, you do have a bit of a bullish trend like that. But my personal preference is ignore this market, and you could potentially buy here on Monday or potentially sell here on Monday, depending what's going on. Here's your GBP versus the USD. So a few days ago we started a break to 26.44. Should take you down lower, which it did. So we're down here now, inverse head and shoulders. Again, if you're really optimistic about the economic outlook for the UK, then you could always buy if you wanted to here. Stop loss will go below 24, say 24.50 or something, just below these levels. If you're, from my perspective, and I think that economically, if we have some sort of hard Brexit, or the uncertainty about a hard Brexit, if you think like me that's going to weigh on the pound, then you're waiting for a break to the downside. Take out this level, and we'll probably start to trade lower. As for dollar yen, I made some changes to this one. I made some changes to this morning at 7 o'clock. Unfortunately, of course, we only do this webinar at 9:30, so I wasn't able to relay this information to you. But the way this was looking at 7 o'clock in the morning, it looked like this was going to head a little bit higher. So for the people that I am in touch with at 7:15 a.m. in the morning, I told them that let's lift the sell zone at a higher level to 108.13. And then maybe from here one could look to rebuild a short position. Now, it's a bit problematic to some extent. On one hand, stock markets are really bullish, and even though I have a negative outlook on the world economy, I can't ignore the fact that the S&P is at a new 2019 high, that the French stock market is about to break out, that the Holland stock markets is about to break out. Like, most stock markets are at very good levels and have a decent trend. So can't ignore that fact. The market is usually cleverer to some extent than the individual investor. So maybe the pricing in QE, not really sure. So at the time they do a QE and cut rates, whatever, maybe the market would already be pricing that in. I'm not sure. All I know, technically, stock markets are really bullish. So if that view is correct, then it's going to be a challenge here with dollar yen. Now, what can I say? Well, again, technically here, we don't have to trade it. So if you believe that the story about stocks is more important than the story of growth, then you wouldn't be shorting. But if you believe we can have bad data today, then up here, technically, there's nothing wrong with shorting. I want 812. Stop loss orders just go above, and you look for this to go lower. Because there's a mixed bag of things here. First you have that downtrend, which is the most important thing. They have a small head and shoulders with left, potentially right shoulder, and the head. The only challenge here, again, stock market, is in the fact that this is one big left shoulder, one big right shoulder, and one big head. Gold prices. So gold prices, we talked about this market needing to have a 50% correction. I said that when we're trading up here, and I'm sticking by that. The market pretty much corrected down to the 50% correction level. It's stabilizing here. It might go a little bit lower, but it shouldn't really not trade much lower than something like, I mean, you see these levels here, maybe down and upwards. I think you're dealing with some funny looking head and shoulders, maybe left, right shoulder, bullish. Alternatively, big head, big left, and the break here is that neckline, and we're just creating that massive right shoulder now. I think in the long run, as I spoke about here before, we're dealing with a breakout out of a multi-year pattern of something that has been suppressed for a long time. This is literally, imagine you squeeze something. Well, not everything you squeeze are gonna bounce back up, right? But like if you, but this in essence, the energy is being compressed, and now it goes like that. It expands. That's the whole market. Market is always just like that. Low volatility, high volatility, and it goes like that. Think Bitcoin, very boring. Suddenly, from 3,500 to 14,000. So this is what we're dealing with here. That's why I continue to remain bullish. As for here, no from payrolls or not, it doesn't really matter too much. As long as shit above this low, there's no change to the outlook. Of course, if NFP are really strong 300, we'll probably be down here, I think. But then again, doesn't mean that we can't bottom out here anyway. Crude oil prices, the idea was to sell here at 57.81, and I continue to be bearish. The market did not unfortunately go all the way up though, so we could sell it. S&P 500, so we talked about buying here a few days ago. I said on a break to the highs here that would lift things upwards. The market did go upwards. Now we're having a bit of profit taking, which makes perfect sense. Now from payrolls, right? We had a few good days of bullish move, seeing a bit of breakout, though pullback. Now you see here we're clearly above the prior 2019 high and the prior or the 2018 high. So that's the breakup point. The market is now correcting lower, and I think if we go down to something like 29.75, I still think people are gonna look to buy. The only time they're not gonna buy here, I think, is if the numbers are terrible. I think not terrible, but anything below 100 is probably gonna scare some people off. If it's below 100, maybe we'll get that 1% decline. We're back down here, so you need to be a bit careful. But a song share about 29.47 and a half. There's no change to the outlook here. And yeah, German DAX. German DAX, I think this is definitely time to book half, if not the whole position. The idea was to buy down here. And the market's gone up quite a bit. Again, it's a bit like this. Went up a lot, then down a little bit, and then up a lot. And then here, when these guys here that are buying here, when they realize, wow, we're not going to go upwards, they start to sell. And they do that because the risk-reward ratio is bad. It's the same thing here. Went all the way up, all the way down, barely corrected. Can still, of course, go upwards, so I wouldn't short sell it, but it's not a good spot to buy. The better spot to buy is down here. Okay, let's see if you guys have any questions. If you follow me on, if you just follow me on on YouTube, this is the first time you see me, then you can always just follow me on Twitter as well at AlexFX00. Well, I'm also available on WhatsApp. So we have Marvin here. Good morning to you, sir. I hope you're having a good day, and I hope you have some nice plans for the weekend. If you don't, doesn't really matter as long as you can enjoy it somehow. I'm probably just gonna chill and sleep. That's what I'm gonna do. We had 2 seminars in ATFX offices this week, so I was working until 9 p.m. 2 days this week, so a bit of relaxing, if anything. Then a bit of work, actually. Okay, so we have no questions, so we're gonna wrap things up. Guys, again, join me on Monday, same time here at the Forex and Trading Webinars page at investingcube.com. Don't forget as well that you can sign up and become members. I haven't published too much stuff now, but we have content here available. Nicholas is publishing a lot of content as well. We have a new guy coming in, most likely on Monday, so you'll see more content, especially from the afternoon. Now, some of these, as you can see here, you need to log in and register. They are free. You just need to become a member. It's very, very easy. You just click on register and you land here. I'll send you this link as well so you can sign up. So you have that if anyone wants to sign up. So most of the content is, all of the content is technically free right now, but you just need to become a member. So first name, last name, email address, confirm email address. You click here, click on submit and continue. It's just gonna ask you about your phone number, and then you're done. You sign in, and the page is gonna look like mine, like this one here, where really you don't have nothing closed. We have the Q3 outlook coming out soon. It's already been done. It's actually been produced already 1 month ago, but they're taking their sweet time to produce the actual content and stuff like that. So I'm waiting for that. Hopefully I can upload it on Monday so you can have access to stuff like that. We also have a few webinars. I don't actually host these webinars, but we have there's skill guys that do this. So we have here in English on July 10th. That should be Monday. No, Wednesday next week. This one here, you just click on register, you sign up. Have several of these ones. So here's mix, a ton of English one, that's good. 2 at the same time even. Trend and pattern trading. So you have a few of them, and you just need to sign up. Okay, guys, thanks so much for watching, and I'll see you guys on Monday here at investingcube.com. Thanks so much, and have a great weekend. Bye-bye.